All right. So, first of all, thank you so much, everyone, for joining us for today's session as you join every day. And first of all, it's a good day. We are seeing noise pump, but that's not something really unexpected. That's just the same resistance BTC is acquiring again, which was expected, which was told to you a couple of days back. So let's just quickly discuss what's happening, and then we will discuss what we have to study today. So let's have a recap. Uh, what we did yesterday, or the day before yesterday, was we discussed what we discussed. Who's going to tell me what we discussed? Huh? All right, I'm going to tell me what we discussed. So we discussed,
I
yes,
Can you please send the meeting from yesterday because I missed it,
yes. After this, we're going to
please.
send last two
Okay.
lectures recording along with this.
Okay, thank you.
Yeah, perfect. All right. So let's discuss what's happening here. First of all, yeah, let's just have a recap first that what we discussed yesterday. Yesterday, we had a discussion on Bollinger Bands and RSI. Over here, the RSI is visible and the Bollinger Bands could be visible if I add it. I haven't added it. MACD is available here. So about RSI, let's have a recap. Every time the RSI is overbought, the price is supposed to decrease. And every time the RSI is oversold, the price is supposed to increase. It's supposed to go back up. It's really like when a lot of people have bought it, it's now overbought. The commodity is now overbought, and we can expect a drop from here that people will start selling because they've bought a lot. And similarly, when my annotations are a little slow, let's just, yep, we're back on track. Right. So, and whenever the, let's say RSI, it's below this level indicates that the RSI, it's oversold, the price is oversold. A lot of people have sold it, so a lot of buyers will start to come in and the price will start to increase from over there. So that was RSI. Today we're going to discuss what is volume. We see a lot of this word volume. We're going to discuss what volume is. Now, a lot of you will already be having built-in volume indicator in TradingView whenever you open TradingView, but I recommend to separately open it because it gives us another feature of EMA, the average line, and we're going to be using that. So what we're going to be doing is that we're going to go to indicator section, selecting volume. Go over here, type in volume, and the first one, the simple one, volume, we're going to click on it, and something like this is going to be visible. Something like this. I'm going to tell you in a while what this is, but for now something like this is going to be visible. So for today we're going to remove all the other indicators and just solely focus on uh, what?
Volume.
Solely focus on the volume, right? Now, as you can see, this is BTC graph, BTC USDD, and I'm not sure if I opened the right one. BTC USDD is the right one. Yep, that's the one. All right. So what I'm about to tell you is that this is the BTC graph, and it is the 1 day graph, right? And previously, I sent you the support resistance drawn on this graph. So let's just start from the very beginning. Let's just remove everything and let's just start raw analysis, right? So if this is the BTC graph 1 day, and obviously you have to go into the bigger time frames. Shorter time frames are not that important. Start from bigger time frames and then go to the shorter time frames and see if there's any information you can get out of there. But shorter time frames itself are complete ass, right? If you're not looking at the bigger time frames, 1 day 4 hour candles, then it's not going to be helping any much. So this is currently the scenario of BTC. And as you can see, it's clearly coming up. It was in the upper trend, and right now it's consolidating. So even today's pump, this was today's pump, right? Which everybody's like so happy about. And it's not really that much of a pump. It's like normal consolidation. So in a smaller picture, You would pick up BTC, you would open BTC and be like, oh my God, everything is in profit today and everybody's like winning. But in reality, it's just normal consolidation. It's nothing big. It's nothing huge. It's only what was expected. So let's just do raw technical analysis and see what volume has to offer to us. Now, to do that, every time you start the analysis, it's really simple. We start with support and resistance, right? Then we go on to indicators and then we go on to the patterns and everything. And we see if we see any pattern forming. Now, to do that, first of all, you have to select the bar and you have to draw the bar somewhere like this, right? Now you have to first make a decision where to draw the bar, where to draw the support. So the support is any level from which the price is rejecting again and rising again. So as you can see over here, the price was increasing, then it decreased and got rejected from this level, got to support at this level, and then start rising again from this level, right? Then the price started increasing all the way up to here, got rejected from here, and then came back again to this level. So it's not basically a line, it's a zone, right? A little like 1 or 2% up or down, that's excusable, right? We still include it in the zone. So again, you can see that the price come down here and give a support over here, almost again over here, again here, again, 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 and again. And if you come on the left side, when it was in the rising position, you can see a wick over here too. And before this was used as a resistance. When price was increasing, first this level was used as a resistance. See these candles, they were rejecting from this level. They increased up to this level, they rised up to this level, and then they got rejected. So previously it was resistance, now it's a support. So it's a very strong zone. That means a lot of buyers and sellers are currently monitoring this zone. So we have to mark this zone no matter what. And I've marked this zone multiple times, and I've also shared into the group. I've also shared it multiple times with you guys in our live classes. So this zone is right now marked, right? So now when you open the same, now when you open the same pattern, the same graph in 15 minutes time frame, you're going to also see this support, which we have drawn in the 1 day time frame. So it's really helpful. So now that we have drawn it, let's just correctly position it. So it's covering the majority of the sections. So as you can see, it's covering this point, it's covering this point, this one, these ones are correctly done, these ones are beautifully done, this one is a little in the zone, so we'll also include it, and this one is done too. Am I clear? Are you guys following me right now?
Yes.
Great.
Yes.
We are too quiet.
Yeah, perfect. So now it's established that there's a very good support over here. Let's just now discuss how this support is actually working. Is this just an imaginary line that the price is just, oh, the price is coming back here again and again, so we just draw a line? Is it like that? Or is there some psychology behind it? Because nothing works out of psychology. It's all psychology. So let me just tell you what was actually happening in the market. The price was increasing, right? And the buyers who had bought from here, they were very vigilant, right? And they were like, we have to sell, whenever there is a resistance, we have to sell. Imagine you took an entry over here, right? You bought BTC over here and you see BTC increasing all the way up to from 70k all the way up to this 90k and then 100k, right? And you would be very vigilant that where is the price, what is the level that the price is going to reverse, so I can sell in profit, I can sell at the maximum top. So every time there's a red candle, a lot of people start selling because they think that the resistance has approached and the price will continue to drop. So first of all, the price was increasing all the way up to here, and then we see a red candle over here. So a lot of sellers started to selling, right? And this become a selling zone. And they started selling, but at the same level, at the same point, a lot of people started buying. So price started increasing. Now, the price started increasing again, and then it increased up to this level, and then it started decreasing, right? It was a pullback. Over here was not a pullback. For those of you who don't know what a pullback is when the price is increasing, and then it decreases almost 50% of it, right? That's a pullback. That means it increased, and then it decreased almost 50% of it. Over here, a naked eye would see that if this is the rise, and this is the fall, this is nowhere even near to 50%. And we will do that. one I will be teaching you Fibonacci retracements. Fibonacci retracements tell us about the pullbacks, but to keep it really simple, a pullback is when the price, it's in one trend, upward or downward, doesn't matter, and it reverses almost 50% of the trend. Now, Over here, the trend reversal was not 50%. That means that only a small amount of sellers were selling and the price will continue to increase, and it did increase, right? But over there, as you can see, the price increased from here to here. This was the increase, but the decrease was almost the same. That means it is a pullback. Now, a lot of sellers are active. Now, people mark this zone of how much BTC dropped and it started rising again. That means what that means, I'm saturating it. Let's just, I will summarize it at the end, but just keep on listening right now. That means buyers are sitting over here and now they are playing a game. They are just buying at this level and then selling up top, buying at this level again, selling up top, selling up top, buying at this level again, selling up top, buying up this level again, selling up top, buy low, sell high. So this trend could continue. So that's why this support is really important. And every time we see a rejection from here, we can expect a pump all the way up to resistance. Now we have to draw resistance. That means a lot of people are just thinking like this: buy at this support. A lot of people, not only me and you, we are drawing this support line. Millions of people in the world are drawing this support line, and everybody thinks that price will come at this level and it will bounce from here. So a lot of people buy it from here. A lot of people have their limit entries here. And where do they sell? At the resistance. So every time the price comes at a support, it starts increasing because buyers pull in. And every time it goes to the resistance, their people have already put their stop losses or limit orders of sell, and it starts to decrease. So we have to take the benefit out of it. So let's just quickly draw this resistance line, and then we can see where does the um, where does the resistance lie, and then we can infer what we can get out of it. So let's just quickly mark our points. The price first got rejected from here, then this is a rejection, this is a rejection, then it increased, and this was a rejection, this was a rejection again, this was a rejection. So if I were to point out, majority of the rejections are falling in this zone, and some and only one is falling around this one. This one is also included in this one because it's closer to it. And this one is a zone, this one is rejection again, this one is rejection again, this one is rejection again. So this zone is actually important. So this is the resistance zone. Majority of the buyers would just sell their Bitcoin whenever it goes to this zone and claim the profit. Nobody wants to hold longer because people know if we hold longer, we will lose the profit. So now we will draw a resistance line here, and this resistance line will tell us that the price, whenever it goes to this level, there's a chances that it can reverse from here because a lot of seller will come into action. So let's just draw a resistance line. So I would just go into the bar section and I would draw a resistance line right here. So, and you have to imagine this resistance line more like a zone rather than just a line. So it has to come into this zone, and plus minus 2% or 3% of deviation shall not be counted and will be exempted. Make sense or not? I hope I'm making sense. And then,
Yes, yes, of course.
yes. And then what we're going to be doing is that now we have the resistance level, right? Now, what are the options we having? What is the possibility? The possibility is simple. The price is falling between support and resistance. It is falling, falling, falling. It's in a pattern. It's like this, right? So yesterday's 2 days ago, the dump happened all the way up till here, and there was a breakout, but it was not confirmed. So, and the price reversed from here, and we expected the same. We expected a rise, and it has rised back up. And what is the expected rise? The expected rise is all the way up to this resistance level. And then the second resistance level is around here to the maximum peak. And if the price crosses this resistance level, then the next target will be here. Majority of the chances are that this is a strong resistance level, this one. This one is a strong resistance level. So price would just come up till here and then reverse again all the way up to here, and then it will rise again. So this is a trend which BTC is following, which it can continue for many days, for months, unless there's a breakout. So we have to now understand what's the breakout, and in the breakout we will be using volume. So the whole point of explaining you guys this concept of support and resistance, that the price normally just fluctuates between the support and resistance, and the major movement is whenever there's a breakout, and in the breakout we will use volume. So let's just now discuss what's the breakout. So breakout is every time the price crosses this resistance level with a big candle, with a big green candle. That means the resistance is now no longer there, right? Resistance is broken. The price will continue to increase from over there with red giant candles, with green giant green candles all the way up to resistance number 2. And if that's broken too, the price will continue all the way up to new all-time highs, right? That's called a breakout. So that's why resistance level is important. Same goes for the support level. If the price was decreasing, the price decreased all the way up till here, right? But it was like a small candle. It got reversed. It didn't have no body, no nothing, no volume. So the price will once it is a strong breakout, the price will continue the downward trend until a major support is achieved. We will draw the supports over here too, but that's a breakout. So I will explain you why is that whenever there's a breakout, there's a big move. There's got to be some logic behind that too, right? Nothing in crypto works out of logic. This technical analysis is all logic. And if you just think it, you can see why this is happening. These support and resistances are not imaginary lines. These are working how humans think. Now, a lot of people, millions of people in the world have marked this resistance level right here. And a lot of people in the world have marked this support level right here. So if a person who's buying Bitcoin over here, he would have a stop loss over here because he knows that if this support is broken, we can be out for days. We can be out for months, and that could be a big, big bearish season. So he would not want to hold on to this BTC. He would just want to sell it over here with a little bit of loss, or maybe he's in profit if he has started his trade from here. And then you want to again buy the dip over here and then again claim the profit. Nobody wants to hold the loss. So millions and millions of people have their stop losses a little below the support level. That if the support is broken, those stop losses are hit. And guess what? If one strong candle breaks the support, gives us the breakout, millions of stop losses are hit. Millions of people sell their Bitcoin because their automatically stop loss is triggered. And what happens when a lot of people sell? Red candles. That's why whenever there's a breakout, there are giant red candles. Same goes for the breakout of the support level. Now, a lot of people, millions of people like you and me, have marked the support level, and they know if there's a breakout, then BTC could be exponential. So instead of buying over here, what people do is just they put some limit orders at a little above the resistance level. So every time there's a big giant candle which crosses this resistance level, their limit entries will be triggered automatically, and millions of people would buy Bitcoin over here. And what will happen when millions of people buy Bitcoin over here? They exponentially rise. It's really that simple. It's like support and resistance. Nobody actually understands support and resistance like this. This is like complete psychology. People just understand it like, oh, if there's a breakout, then it's going to be big. But people don't actually understand why, when there's a breakout, the price starts to increase. It's all market sentiment. People are watching it, just like me and you. Millions of people are out there. Big players are out there, which are watching these support and resistances. And instead of just trading over here in this zone, when there's no breakout, people try to put limit orders over here. Even if you are a future trader, people put their limit orders over here as long positions, and if it's dropping, people put their limit orders over here if it's supposed to drop just below the support level. So basically, this is how this is how the breakouts, they're really helpful, and this is what's the psychology that's behind the breakouts. Now let me tell you, how can you exactly tell when the breakout is actually going to be confirmed or not, right? So first of all, the candlesticks are going to be playing a huge role in determining whether the breakout is actually a confirmed breakout or it's a fake out. Because market can give you fake outs. There are big players sitting in the market which want you to sell your Bitcoin over here. Who's drawing these annotations? It's kind of funny, I know, but let's just keep the fun for the end. It's yeah. Yeah, someone is having fun. Okay. Now enough fun. Just delete it. All right. Now someone has drawn it and he's like, nope, I'm not deleting it. Okay, you can keep it. You can have your fun. All right. So let's just quickly discuss how we're gonna know whether it's a fake out or a breakout. Know what I'm saying? Let's just
Yes.
how can we know if it's a breakout or a fake out? Now, I told you there are two parameters that are going to help us to determine whether it's a fake out or a breakout. And what are the two parameters? Firstly, the candlesticks are going to help us a lot, which I will teach you in the upcoming modules. We're not going to discuss a lot of candlesticks. I will just give you some hints, and maybe you can take some clues out of it. But we are going to have detailed modules, like we discussed chart patterns. We're going to have detailed modules on how the candle patterns actually help us infer whether it's a breakout or a fake out. But for now, let's just use volume. We have to use volume. Now, what is volume? Volume means that a lot of uh, money is coming into the trade right now. A lot of money is coming into the commodity right now, or a lot of money is exiting the commodity. So over here, the volume is indicated. Red candles volume, green candles volume. Doesn't matter. The only thing that matters is a lot of people are doing something at that point. That means that whichever direction that trade is going, it could be exponential. It could be exponential in that direction. But again, we have to use the other indicators and candles and everything. So to keep it really simple, you have to first of all use the volume indicator and go into the settings section really quickly. Go into the style section and click this volume MA. Once you click it, this line is going to appear over here, right? And now you're going to quickly come, and I'm going to keep it really simple for you guys. If the volume crosses this MA line, right? That means that the volume is significant. That means the movement in that direction could be significant. I'm not saying every time, I'm saying it could be significant, right? It could be significant. It could be a confirmed breakout. But up until the volume is below the MA line, that means a lot of people are not into, not a lot of people are not interested. So it could not be an actual breakout, right? Now this works in 1 day time frame too, but I want you to look volume especially in smaller time frames, because smaller time frames give us a more on time approach, because volume is not about what's happening in the whole day. The volume is all about what's happening at the current moment. So over here, while the volume is indicating what's happening in a longer time frame, what's happening in the whole day, if we switch to 15 minutes time frame, then it's going to give us a different look, uh, what's happening in the market at that specific time. Now, if you can look, if I zoom out, now someone has done some creative artwork which is interfering with our studies, obviously, but it's fine. Artwork is always appreciated. I'm a fan of art. So this could be an abstract art, and maybe a millionaire would buy it from you. Yeah, you never know. Millionaires would buy everything. Millionaires would buy a banana
Oh,
for $2.5 million.
yeah.
Yeah, it's like maybe your artwork get listed, and then maybe some millionaire buy it from too, and then erase it and have fun. So he just bought it, and then let's just quickly look at it. Now, as you can see over here, it's completely different in 15 minutes time frame. 15 minutes time frame, it's a lot more efficient, because it's quite on spot what's happening there. In 1 day time frame, it kind of averages out to what's happening the whole day. We want to look, because breakout is happening within seconds, right? Anytime there's a breakout, that let's say this is a support, this is a resistance, and if it's a breakout happening right now, I want to make a decision right now within seconds whether it's a breakout or fake out. And 1 day time frame cannot, 1 day time frame volume cannot help me. I want to see whether within minutes, if the volume is increasing within minutes exponentially or not. I don't want to see an average of the whole day. So we're going to keep volume on shorter time frames. Now, if you can look really closely over here, I'm going to zoom out, and we're going to quickly go on to our support level. Now, this was the support level which was broken the other day, right? And it was expected that the price can drop from here. Now, as you can see over here, let's just quickly look at this. Let's just, yeah, it is kind of interfering with it. Let me just, all right, for now, let's just quickly hide the volume. Okay. Now, let's just quickly study. We have to quickly study. We have less time. Now, the breakout happened over here, right? And it was a breakout. But there's some candle pattern which is suggesting that it could be a fake out. This candle, this red candle, this is supposed to be a red candle, which turned out to be a green candle and did not had no solid body. That means the price decreased, but buyers reversed it within 15 minutes. It was not able to even hold its ground for 15 minutes. That's why this could be an indicative of a fake out. So the same thing happened. The price reversed from here, and the price did not continue to decrease. And people thought that it's a breakout, and a lot of people would have entered short over here in future trading, or a lot of people would have exited the market, would have sold their BTC, and that's what institutions and these exchanges want you to do. They want you to sell your BTC, and then they want to buy BTC, then they want to buy BTC at a low, and then claim all the profits for themselves. Or they want you to start your short trades with multi-million dollars and then just liquidate you all the way over here with big pumps. So basically, breakouts are no doubt breakouts are really important, and they really help, but they're really risky too. And what we have to do, what we have to master is we have to figure out when the breakout is an actual breakout or whenever it's just like a fake out. So over here was a fake out. So I'm going to tell you now how we're going to be using volume to determine whether it's a breakout or a fake out. All right, let's just quickly, yeah, the volume is indicated. Now, every time the EMA is above the volume is above this blue line, that means significant volume is there. That means it can be an actual breakout, right? So over here, as you can see, over here, the breakout was really big and a lot of volume was in there, but still we had the reversal. The reason was that we were still in the zone. I've told you that it's not basically a line, it's a zone. So the resistance is supposedly over here. It's not just in this line, this specific line over here. So you have to basically think it as a zone. So we would still wait. We would still give a plus minus 2-3% of deviation above or below the support and resistance level. So we waited, and we waited for this 2%, and it did got reverse. It was not like giant candles. It did have the volume, but it didn't had this specific candles and specific movement beyond the resistance level. It was still in the resistance zone. uh, and let's just now quickly go into our support and see when the support gives us a breakout. Now, exactly. Now, as you can see over here, yeah, let's just zoom in. Yeah, as you can see over here, just at this point, there was a huge amount of volume in the market, and this volume was not in this candle. This volume was in this candle, which was quite smaller than this candle. That means that a lot of buyers are actually interested, and price could go a lot higher than just this candle, right? Because if you just go back in time, and let's say you woke up and the graph was just almost up till here. This has not yet formed. So to you, this green candle is almost as big as this red candle. Nothing special, right? You are just looking at like, oh, red candles are forming, oh, green candle is forming. This green candle has not yet formed. So this green candle wouldn't look so special to you, right? But if you had looked at this volume right here, this would look a lot special to you now, because you know that this green candle, although it's quite short, but it has a lot of volume behind it. And that's exactly what told us that the pump is going to come. And then we just enter the trade, either long position or we buy Bitcoin. And look at that, it just rockets. Now, one thing I want to tell you guys, look at what's happening to the volume. Is it considerably increasing or is it considerably decreasing?
Decreasing.
It's considerably decreasing. That means the volume, as it's going up, it's decreasing. So the average line is not important now. We have a trend in the volume. We have a trend that the volume is considerably decreasing. That means at this specific level, when we have a volume of this, and it's considerably in the lower trend, we can expect a trend reversal. We cannot expect a confirmed breakout. It did give us a breakout, and there are two options after a breakout. Either it could skyrocket up to 2x, 3x, or it can reverse back. So when I will see the volume in the downward trend, I would expect the trend to reverse, and the exact same thing happened. It reversed. Obviously, we will be using all the other indicators along with it. We're not just going to be using volume, obviously we will be using MACD. MACD will be telling us a lot of things, and MACD was really, really powerful. If I just open up MACD for a moment over here, MACD was the reason we predicted this dump, and it was like very beautifully predicted by MACD. Do we have MACD over here? Okay, we don't have MACD over there. Let's just see RSI. RSI predicts pretty well too. Let's just quickly zoom into. Okay, forget about it. We have less time. We'll do that later. So the thing which I have to teach you right now is that you have to look at not just the average line, you have to look in the volume trend too, what the volume trend is telling you. Similarly, if you look over here, you can see that this candle, which gave us the breakout again, the resistance was broken, and now this resistance was being used as support, right? Whenever the resistance is broken, the resistance becomes the support, and this support was broken with this candle. And as you can see, this candle had volume. So there was a possibility, and it was above this average line of this average blue line too. So we can think that maybe it's a good breakout, and we have so many signs of reversal. We had the volume in downward trends, which was suggesting that the price could reverse from here. We have the red candle with a larger volume, which is also suggesting that the price could reverse from here. MACD is telling us the price could reverse. RSI is telling us price could reverse. And there's a huge fair value gap over here too. So a lot of things are suggesting for a price reversal for this dump. So by that, you can actually predict the dump. And as you can see over here, the price reversed. And if you look at this volume again, this volume was in upward trend, right over here. So the price would keep on decreasing all the way up till here. And from here, at this candle, the volume started the downward trend. That means the downward volume, the red volume, is now in the reversal trend, and the price will reverse from here after a certain time. And it does reverses. It does take some time. It just starts to consolidate. It is falling actually due to the volume in the downward trend. And obviously, volume is not one thing which you will rely on 100%. It was just a small indicator which you will be using along with all our other indicators. So it will not perform in every situation. And obviously, whenever there's a trend, upward trend or downward trend, volumes will be doing some fluctuations too, right? And I have told you how to spot an upward or downward trend. That's through EMA, right? Exponential moving averages tell you which trend is right now current in practice. So to cover it all up, to sum it all up, what we actually study today, we actually study that whenever you are supposed to identify what is going to be the next move of any commodity, you have to draw the support and resistance line. You have to wait for the breakout. The breakouts would help you either go for a big bump or a big dump, or you could just trade between the support and resistance, because you know the price is going to fluctuate between the support and resistance. You could just buy the support, sell it resistance, buy the support, sell it resistance. And if you're buying at support, your stop loss would be a little below the support, and if you are selling at resistance, your stop loss would be a little above the resistance. It's really that simple, and volume will help you to determine whether it's a fake out or an actual breakout. And not only if it's in the upward trend, the volume is in the upward trend, that means the price will continue in that trend, in that direction. If it's a red volume, the price will continue in the downward direction for a while, and if it's an upward trend, the price will continue in the upward direction for a while. Okay, fellas, was that clear or not?
Yes.
Pretty clear.
Now I finally understand this volume.
Yep, 100%. And the more you practice it, the more you're going to become the perfect. Less than 1 minute is left, so I'm going to be concluding. Thank you so much, everyone, for joining. Any questions? I hope everything